My name is Sunil Fernandez. I'm the managing editor for Goodreturns.in. I'm here to speak to you on the rupee falling to a new record low. So as we speak today, the rupee has fallen to 78.24 to the US dollar. That's a new lifetime low or a record low for the Indian rupee. I'll tell you quickly why the rupee has fallen to a new lifetime low against the US dollar. To begin with, we must understand that one of the biggest reasons is the monetary tightening in the US. So the US Federal Reserve is tightening its monetary policy. It is increasing interest rates in the US. Now, what happens when interest rates and monetary tightening happens not only in the US but across the globe? Equities are sold into. Equities of emerging markets are sold into. And now India is an emerging market, and stocks in India are being sold into by foreign portfolio investors. In fact, foreign portfolio investors year to date have sold a staggering $24 billion in Indian equities. So when foreign portfolio investors sell in Indian equities, they repatriate dollars. So when they repatriate dollars, there is a demand for dollars. So this has led to the rupee falling against the dollar because of demand by foreign portfolio investors who have sold almost $24 billion worth stocks in India. Now, why are they selling stocks in India and repatriating it is largely because interest rates across the world are rising. When interest rates rise, they sell equities and move into safe bonds, sovereign bonds. So the US Federal Reserve, for example, is slated to meet this week and is likely to raise interest rates again by 50 basis points. So this makes debt instruments attractive and equities less attractive. So they sell equities and they park it into debt. So that's what been happening over the last since the start of the year in India, when equities are being sold into by foreign portfolio investors because debt is becoming more attractive as interest rates across the globe are moving higher. So this has led to huge demand for dollars because of repatriation of the equity amount that foreign portfolios are selling. They need to repatriate it abroad. This is leading to demand for dollars. Now, second biggest reason for the rupee falling is crude oil. Crude oil has moved to $120 a barrel. Now, two things are happening with crude oil. One, with COVID out, there is a volume growth for crude oil. So people are traveling. There is a demand for crude oil which has to be refined into petroleum and diesel. So volume has increased and prices of crude oil have increased. So it's a double whammy. This has led to a huge import bill for crude oil. Now, obviously, India imports most of its crude oil requirements, for which it has to pay in dollar terms. Now, when it pays in dollar terms, it needs dollars, which is why there is a demand for the US dollar, leading to a fall in the Indian rupee. So this is reason number two. Now, how can the RBI intervene? The RBI can intervene by selling dollars. Remember, India has a large forex reserve. It can sell dollars, but the problem is each time you sell dollars, it depletes the forex reserves. So obviously the Reserve Bank of India can intervene by selling dollars, but then it tantamounts to reducing your forex reserves. So this is a problem that is there, but we believe that the RBI will intervene in the forex market to ensure that the rupee remains stable, the rupee is less volatile, and if the rupee continues to fall, it will increase imported costs of products, including crude oil, which is ultimately retailed into petrol, diesel, etc. So really, there are two pressure points: crude oil and foreign selling of stocks by foreign portfolio investors, which is leading to a sharp fall in the Indian rupee against the dollar. That's all from us for now. To continue watching our videos, like and subscribe. Thank you, and that's it for now. Thank you.